What a data it was! Palantir is topping expectations of economists, but it's not a time to thrill. But as it was a very hyped stock, and that data might be not enough. As you do know, earnings estimates are very often lowered by economists to remain a positive tendency growing stock. So economists therefore giving it a room for the stock to thrive. But is Palantir a buy after earnings, and can it get to $50? That's what we have on the table today. I'm very glad you decided to pop in. That's Wall Street Station channel that is making lives at 8 a.m. ET time. So if you are right there, up and ready, there will be a great time to start over. So with that being said, let's jump to our element of today's theme. Is Palantir a buy after earnings? And that's what we would like to revolve around right now. So for that things we want to cover, that Palantir is right after earnings report, and I would say that there were no very significant positive or negative developments. As you can find right here, Palantir reported a 30% rise in Q2 revenue and offering mainly a favorable outlook for the next quarter. It's right now a steady and stable situation, so we don't need to really fall into a thinking that the type of stock is overblown right now. I would rather emphasize that there is also a very strict cautious I wanted to point out regarding that we cannot celebrate prematurely or become complacent. It's best to stay proactive and right now maintain a momentum for the stock, but with declaring victory, it's really far from it. Palantir, as we've just and you probably are familiar to, specializes in developing software solutions for data analysis, integration, visualization, and so other types of things. We do know that as for the software company, scaling solution is quite easy, but what I wanted to point out, Palantir might be waving on this, so riding on this wave of AI harnessing companies that right now there are more investors due to this really hyped theme of AI. And with this environment, the valuation may get to remind more of an overblown rather than decent one that would like to buy it. So even though they reported a 30% rise in Q2 revenue, we cannot really say that it may just justify this astronomical growth of over 200% since the beginning of a year. So what I want to really find out right here is that when the company is basing on the merely one product and this Palantir Gotham platform that is used by government and intelligence agencies as well as some other enterprises, we could find that it's kind of a as some of the other people in the web say, that's a Louis Vuitton type of approach when we are trying to produce only services approach to the companies of a high value type of demand, but rather not focusing mainly on other type not that sophisticated players in the area that may eventually harm its further growth. Palantir right now is in its infancy phase. That's why we need to really be very, I would say, preventive in terms of finding out new players, new contractors. So the company is garnering attention, but due to its main contractor being a governor, there might be a strict social, I would say, turnaround from a type of solutions, as there are many controversies regarding privacy, civil liberties, or surveillance. So I would say the Palantir need to, when I will talk about this in a moment, need to really widen the approach. And what will it take from Palantir to keep up to expectations of this high valuation? Right now, this PE ratio is much higher than the rest of the sector of defensive stocks. That means that like Tesla, there is many of proponents and many of different type of hyped promises. Can we keep up to expectations with this Q2 earnings per share that were 5 cents, adjusted in line with predictions, with revenue at 533 million, meeting expectations. Right now, it's giving us a outlook that finding out that Palantir might be on the right path to meet it. But after earnings, there are many also troubleshoot errors that constitute the company to push them to smoother functioning. Among them, I would like to point out there is a necessity in a higher development, providing better software solutions for data analysis and integration for not only the type of companies out of the top-notch type of a interest, but also they need to emphasize on attracting and retaining customers through other type of competitive pricing niche and incremental revenue growth. So yes, I do know that team reported impressive growth in their API clients with significant interest and alignment with IT departments, but we need to prioritize establishing long-lasting customer connections over short-term revenue gains. And right now, even though we are getting to the next quarter of profits eventually, that might be not enough. But with that hyped stock, when Max when Mr. Karp said that they believe that the Palantir will change the GDP of America, and Palantir will participate in that delta between where the GDP is now and where we will get to, and we can find that there will be more and more probable proponents of the stock with that type of a hyped software solution. But if we just get back to our presentation, we may find that whenever the company is saying that it will become major software company, as Mr. Karp said, it brings also many of expectations. And for now, as in order to become a major software company for Palantir, that may even with these plans of being included in a S&P 500 after sustained profitability, and with this 1 billion buyback program, we need something more than the government revenue, and we need something that will prove that Alex Karp can scale the solution. For now, for the time being, it is still many things to do, along with attracting top talent to enhance innovation, targeted acquisitions to expand technology as well. So what's necessary then is that will really boost the valuation right further is this substantial cash reserve that will be really directed to de-risking the business type of elements and creating a strong foundation for future growth. So this substantial cash holdings and minimal debt, highlighting the importance of these factors in the company's growth potential, right now need to really be directed properly. So there are whole of the potential for the stock to thrive, but with this necessity to leverage its cash reserves, we need to find, and the stock need to really find its experience that will lead the way in the defensive type of stocks. So we need the cash to attract top tier talents, bolstering the company's capabilities and innovation potential. Right now there is many talking, but we need Alex Karp to talk its way, and right now there is many things to do. So with all that being said, there is many facts, but we need to just focus on what's matter the most right now. The investors, the social media also is really thrilled with that type of data, but many might be in price already. So we are talking about accelerating Palantir's growth by integrating complementary technologies, but there is still many talk, and despite having the company profiting finally, we need to still maintain on the path of the growth if we wanna rise that high. Right now, that might be not sustainable, and we will just talk about it in a second. So all things about uniqueness. So Palantir is wanna to be unique and serve its products to a very type of a low niche of contractors. So for me, as a widely known globally stock company, Palantir should cater to a broader customer base with lower initial prices, and that's what the problems right now is, that the area of contractors is very tight. So Palantir for me is the one of the company that ought to emphasize the prospects of not only securing high value contracts and serving the select customer, as it's still right now in its, as I said, in its infancy phase, and need to really secure its type of relations. So Palantir right now is trying to find a unique position in solidly securing high value contracts and focusing on select customers, and they believe that will allow to thrive without needing to serve every potential client. So everything fine, but focusing on strategic clientele won't give the scale that they would have get by going wider. So diversifying prospects is the only one way that it will get international recognizable, and eventually it may compete with other S&P 500 behemoths. So with that being said, we need to also talk about the current risks for the stock. We'll talk about technicals later, so stay by the end. But for now, the macroeconomic outlook is not very rosy as it may appear at first. So the sentiment on the market is very high, but US non-farm payrolls expected at 50K this quarter is a dire outlook for the economy by large. And that's what I wanted to exactly point out, is that this curve is about to get dropped. With that being said, Palantir, as it's a still growing stock, very prone to the market outlook, the global outlook as well, we can find that we need the proper condition in the economy in order to have it rise and rise. For that being said, with this outlook, not very optimistic one, with this global macro models and analyst expectations that the non-farm payrolls may drop, that's one of the most crucial leading indicator of the cracks in the system. In the long term, United States may possibly fall into a higher problem. Right now, we are recovering, that we'll talk about in a sec. We are recovering out of this economic trough, but those outlooks are not very prominent one. And with that being said, also the Fed is really strictly looking at those economic data, and the next interest rate decision may eventually lead to higher type of a level of interest rate cuts, or if that, with that being said, with non-farm payrolls eventually dropping may lead to eventual cuts, and it may eventually symbolize that we are right now entering a possible recessive territory, as almost every time in the history of over 100 years of a Wall Street, when the interest rate started being cutting, we've have met a very difficult time, very strong headwinds for the economy by large. So for now, GDP, industrial production and retail sales starting to show positive growth after a period of contraction. Right here you can find where we are with recovery phase, and outperformance right here should be real estate and industrials. But for now, we need to also reassess and admit that GDP, industrial production and retail sales are the lagging indicators, and might be just talking about the state of the economy that was right in the first half of this year. But the leading indicators right now are showing a contraction and also backtracking from its positive tendencies. Therefore, I need to be very cautious, and that might be a presage of something much more troublesome that may happen in the economy. So right now, the outstanding rising companies are during the recovery phase, those all that are connected to real estate, consumer discretionary and materials, but also technology should rise, and that's what we've noticed and observed during quarter second of 2022. But right now we need to look ahead and those leading indicators to reassess. That's why we are looking at housing market as well as the job market. As monetary policy eases right now, interest rates still standing still, we have a chance to handle with this recessive type of a territory, but still we need more proof and resiliency of the system. And with that type of a high level of interest rates, that's not very, very far from having any catalyst that may spoil the party and bring those valuations of many of fragile to volatility stocks lower. But if we just look at the technicals, look at here, I will just send you to my another window, so I will show you the valuation and how it plays out right here. So PLTR is the stock of Palantir. We can find that pre-market right here is at 17.69. But if we get to the daily, just look at or even the weekly, just look at the strong base right here that was formed since second half of 2020 and the late 2021, and that's what we may say that is a strict congestion zone that allows the market to move through it without a very, very accumulated power. So for now, we can find that with that strong candles on a weekly of Palantir, we are losing its power. And just look at the BYND stock on a daily. That was a very similar pattern to what we formed on a Palantir right at first. So we have formed a strong base, the upper base of this range of valuation 136 and 238, exactly the formation of what we've built right at the Palantir right now. But if we just look at the next period, let's say since November of 2019 to January, we've had a massive rally with the valuation being even risen over 70%. And right after, just look at what happened. So we have a drawdown. So it doesn't really necessarily tells us that for Palantir, the story might be the same, as we are at the very different fundamentally type of stock than BYND, that's mainly focused on food type of products rather than a software one. So the software one is easier to scale typically, but ordinarily Palantir should perform better if it will deliver on and on. But for now, with this very strong congestion zone, we need a much higher type of a demand than it's right now. We can find that this type of a price behavior is showing that with this, even those strong deal flow that recently been exciting for that numbers that right now has appeared, still we may be getting ahead of itself, and for now earnings may really push the valuations lower with this rejection yet to supposedly appear. This bearish candle on a weekly right now not giving us a higher chance to push the valuation right with a one move. It will be a strong battle between bulls and bears. I don't say that the Palantir will drop instantly to 11 bucks, but the retest of this 14.92 at least will be highly expected. So we are dealing right now with a running correction. It means that the highs and lows are supposedly higher, and it's it means that the stock is really strong right now, but latest price action is not very favorable, to say at least. So also, if we just have a look at other ETFs that maybe not containing Palantir stock, but Invesco defensive equity ETF right now is showing a kind of a resistance as well, that there is not much of a room to grow as we are right now. Even though we are in an uptrend, we still need to hit the ceiling that's giving us a chance to move from here of at most 4%. That's why for Palantir stock, taking all of this, the defensive ETFs as well may have a more consolidation period than it's right now been talked in a media, right? So that's why this strong deal flow of Palantir of late might be not satisfactory for us to push it higher, and therefore I would await for the pullback for Palantir to the next very important volume profile zone that is right at the 15.28. Also, if we just look at Palantir option chain, we can find that there is a very strong interest in, to just zoom in, very strong interest in the stock, largely as open interest is the total number of outstanding contracts that haven't been settled for. And right here, with this open interest at with a strike of 19, we can find that there is a absolutely the very hyped stock that normally you don't wanna buy. With also that overhyped valuation, we can find that the pullback is strictly eventual and should take place on a way. So right here you can find that the Palantir option chain is showing a kind of a absolutely ecstatic modes on the stock. That's why I would really steer clear of it. So what are the last final thoughts of me? So definitely what stands out for Palantir is profitability, absence of debt, and a substantial cash reserve of nearly 3 billion. But digging down the rabbit hole, there is still many hype among the slides that also Alex Karp has presented. There is a pure hype marketing. So we need a much more data in order to reassess the company further, and going to $50 right now through this very strict congestion zone at 20s may take even over a year and even 2 or 3 years. So I think the current market might give opportunities to maximize profit within a short term, but in order to execute such strategy, and you would need to be a skilled practitioner or even scalper that is really taking profit out of the very low type of a volatile moves. So for now, Palantir should pull back, and the after earnings period would be a great moment for many of hedge funds to just trim some position. So it's recommended to consider securing profits potentially through direct sales or selling covered calls to collect premiums. An ideal strategy involves, of course, leaving gains if you already invested while withdrawing original investment. This would always works out fine. But let me know in the comment section below whether you agree with this stance of mine or not, and what's your attitude to Palantir. Would you buy it right now, even though the earnings period is over? So I'm very open to your opinion. I'm very glad you decided to pop in, and if you wanna have more videos like that, subscribe to the channel, and we are seeing each other tomorrow at 8 AM ET time, and have a